know when we are recording.
Hi, Facebook. You see that?
Mama, I made it.
Mama, I made it to Facebook Live. That's so funny. Let me just grab some water here. I'll try to
Okay. So now we are live. Hey, Facebook. Welcome, guys.
Yay. Woo-hoo.
All right, and we are recording. Wait, not yet, sorry. Now we're recording.
All right. Welcome to Real Women Real Estate. I'm Courtney.
I'm Kimberly.
I'm Ebony.
And woo-woo.
I'm Shanaé.
Whoop, whoop.
Yes, we have a special guest today, Shanaé. Shanaé, can you pronounce your last name for us so that I don't botch it?
Absolutely. Mabrie. So think May like the month and Brie like the cheese.
Oh, I like it. Shanaé Marbrie. We have a special guest here talking about 1031 exchange. But before we get into Shanaé and all of her accomplishments, we know we have a quote for the day, right? So let's do it. If you really want to do something, you will find a way. If you don't, you will find an excuse. And that is by the incomparable Jim Rohn. Check him out. I found that quote actually from Think and Grow Rich. They referenced that. And so very, very good. All right, now along with our guests, I'm so super excited to have you. So Shanaé is the Vice President and Regional Sales Executive for Old Republic Exchange. She has over 10 years experience in the real estate industry, and she's super young. So how do you have all this experience? She has focused solely on exchanges since 2012, and that includes delayed, simultaneous, reverse, and improved exchanges. So we'll get into all of that and what all that means, right? Shanaé holds the professional designation of Certified Exchange Specialist, earned through the Foundation of Exchange Accommodators. Her attention to detail, combined with her real estate industry, is the foundation of her success. And we're excited to find out all about your success and talk to you. Welcome. Thank you for joining us.
Thank you for having me. Gosh, you guys make me sound so great.
Oh, no, don't be modest. Don't be modest. So let's just get right into it. So, our first question is, just tell us how you got started in real estate. And, when you did, how did you settle on, actually, this is a key thing right here. We want to know, did real estate find you or did you find it? That is my classic Eb right there.
That's kind of it's a trick question. I would say it was kind of mutual. And the reason I say that, so when I was going to school, I was a communications major in college. Didn't really know what I wanted to do career-wise, but I figured, hey, if I go into communications, I'll figure something out. And I was kind of leaning more towards maybe the marketing or advertising kind of avenue. And then I had cable TV. I discovered HGTV. And then I became obsessed with house hunters. And that's truly, in all honesty, where my passion for real estate began. And it was just watching countless episodes of house hunters. I think there's probably like 200 seasons, and I maybe have watched 190 of the 200. But, I really became passionate about real estate and wanting to understand, because I was always so perplexed where you would see these couples buying this home and it's like, oh, I'm a school teacher and oh, I'm a musician and we're buying $1 million home. And I'm like, how? What are you doing? What is this? And so it really piqued my interest. And I actually started out my career as a real estate agent in 2005. I started everything when I was 6 years old. I will forever be 21, just so we're clear.
I'm trying to do some quick math.
Yeah, so started out as an agent in 2005. And as you all know, 2005 in real estate was a very challenging time. But I was still very much interested in learning real estate. And then I wanted to kind of go beyond just the selling of real estate and that side of things. And I truly fell into 1031 exchanges, because when I started out in real estate, there wasn't much exchange activity happening at that time. So I had never delved into exchanges, never knew anything about it until I was interviewing for a position.
So that leads me to this next question, right? Because 1031 exchange isn't something that you just know about as an investor. I mean, that is a really particular niche that I feel like is secretive, and one of those things that isn't shared. It's one of those, if you know about it, you know about it, right? And it's not something that is passed along or taught. And I didn't know about it, honestly, until I actually got my license. That isn't something that I heard, knew much about. And so what made you just want to carve out a niche for 1031 exchange? Like, what was it about 1031 exchange that said, oh, this is it. This is where I'm going?
Said no one ever, by the way.
Right, exactly.
Honestly, it was my predecessor, who is a dear friend and mentor to me. And I connected with her through a former employer. And at the time, she was looking for a new assistant. And I was still in real estate, but not really in the area that I wanted to be in. But I still wanted to be very much involved in real estate. And I knew that I had this innate ability to learn really complex concepts and then break it down into layman's terms. And I always felt like that was always missing in this industry. And I always had this desire to know more. And I like figuring out very complex ideas that I know most people can't figure out. And so when I was trying to learn about exchanges, and I don't know if you guys have ever Googled 1031 exchanges, but it is truly like reading a foreign language. Like, it's ridiculous. And I remember as I was preparing for this interview, I thought, let me at least Google 1031 exchanges, because I didn't know what it was, but I knew I was going to interview for a job. And I Googled, and I was like, I just spent like an hour reading the same webpage, and I still don't know what this is. I did not even remotely understand it. And so I finally just decided, memorize 2 sentences and throw it out at some point in the interview. Nailed it.
Pro tip, when you're preparing for an interview, just whittle it down to something in 2 minutes or less. That's very smart, actually.
Yeah. So, but you know what? It was convincing enough. And I figured as long as I could get my foot in the door, I will be a student and a master of the craft. I just need an opportunity. And that's really how I fell into exchanges. It was just, again, someone needing help. And I thought, I can do this, having zero experience or knowledge. And I just said, I'm going to, I'll absorb everything that you have to teach and to offer, and I will do as much research as possible.
Okay, so that was me yesterday. And I was like, you know what? I'm going to let her tell us what it is, because I was like, I don't know what these words are on this page on Google. I don't have this kind of time. So could you please describe what a 1031 exchange is to new investors and me?
Absolutely. And speaking to myself from 8.5 years ago, right? So 1031 exchange.
Speaking to your 6-year-old self, right?
Yeah, there we go. So a 1031 exchange is it refers to the section of the tax code. It's section 1031 of the tax code. What it simply says is that someone can sell investment property and reinvest into other investment property and defer having to pay their taxes as long as they're using a third-party qualified intermediary, such as myself, to hold the funds in trust for them. So they're not actually receiving any of the money. When they sell, their proceeds come to us and we hold it and then fund the purchase of their replacement property.
So in other words, I shouldn't have this money in my bank account.
Minor detail.
Oh, that's good to know. Yeah, I'm very intrigued by this.
Yeah. So, I mean, it's a great opportunity for people who own investment property to defer having to pay their taxes. And you can exchange for as long as you live, for as many properties as you have. and continue to defer the taxes. So it's really a way to just build wealth through real estate.
Well, what are the requirements and what are the prerequisites? Like, how do you even get into that? Or so, for instance, if I flip a home, like we've done, what do I do with that?
So flip properties don't actually qualify for an exchange. So in order to qualify for the exchange, the property that's being sold has to be held for investment purposes or for productive use in the trade or business.
Okay.
So if you're just buying property, fix it, flip it, and sell, it doesn't qualify for an exchange. But if you buy it, you know, fix it, put a tenant in there, and then later sell, now you've got an investment property.
Okay.
And
so I have a buy and hold right now that I just closed on last week. See, I'm clearly asking my own questions right now.
There you go. There we go.
But yes, so what are the requirements, prerequisites, qualifications, stuff like that, like you said, for us to know and for new investors for sure to understand what this is? Because before Courtney, this is my first time ever hearing of it. I was like, wait, what? What did she do? Okay.
Yeah, and it's a great question. So the challenge is that with the tax code, there's a lot of it that's very black and white, but then there's a lot that operates in the gray. And even though the IRS says a property acquired strictly for resale doesn't qualify, so in the case of a flip, it doesn't qualify for an exchange, there's nothing actually in the tax code that specifically sets out the timeline that you actually have to own a property as investment for it to qualify. So that's why it's gray. Based on some revenue procedures that have come out in recent years, many CPAs feel that 24 months is a safe timeline. You know, more aggressively speaking, 1 year spanned over 2 tax periods might also qualify. But again, it's not clearly set out. So what's most important is the intent. And was your intent to actually own and hold that property for investment? So let's say that you sell this investment property, or rather before you sell, you get in contract with the buyer, you open escrow with the title company. That's when you would engage myself to initiate the 1031 exchange. I'll coordinate directly with escrow. We draft our instructions where we're assigning ourselves into the purchase and sell agreement to act as a seller in the transaction and really act as a principal party. And we're going to sign off on the transfer of the property from you to the ultimate buyer. And then once that closing occurs, the title company wires the money to us. And so you would have 45 days to identify in writing the property or properties that you want to buy. And then you would have 180 days to complete the purchase. And then we fund the transaction.
I have a question. What happens if you don't find another property to purchase within that 180-day time period? What happens to the funds that you just acquired from selling your previous property?
Great question. So if you fail to identify a property within the 45-day period, you're just going to lose the benefit of the exchange, and then you just pay the taxes as you ordinarily would if you were just selling and, you know, cashing out. If you do identify property and then you can't close on what you identify, you're still going to lose the benefit of the exchange. So it's, you know, it's a failed exchange either way in a taxable event. And there's no penalty if you fail on the exchange. You just pay taxes. Minor detail.
Minor detail, yeah, but I can imagine like there's some sort of you really don't want to lose that tax benefit. So it sounds like it's a race against the clock to go ahead and get that accomplished, so that you can receive those benefits. Am I right?
Correct. Exactly.
No, I was just going to ask, you know, it seems like you're kind of kicking the bucket, like, you know, kicking the can down the road with
You kick the can until you kick the can.
You kick the can until you kick the can, right? So, you know, at some point, I imagine this would catch up with you, or maybe not. Can you do, like you said, you just keep deferring the tax until you just can't anymore? And there's nothing really in the tax code that maybe says that you can't just keep doing this forever and ever and ever?
You know, there's an irreverent phrase that we like to use in our industry that's called swap till you drop. And this just, you keep swapping or changing from one property to the next. And you do this until you eventually drop or pass away. And under current tax law, your heirs will receive what's called a stepped up cost basis to market value, which means that when you pass away, the basis is going to be reassessed and your heirs don't have to pay back the taxes you had deferred all those years through exchanging. I know.
Oh, the plot thickens.
Over here like, wow.
Uh-huh.
So this is like, it sounds like it's really key to like create and maintain generational wealth.
Absolutely.
It's like ensuring that that next generation gets to benefit from the work you've done with building out a portfolio. That's awesome. Wow. More people should do this. Why don't more people know about this?
You know, that's the thing. It's something that's not talked about enough. And which is why I say, you know, my role and my job is really to provide that education that people need in order to make an informed decision. And prior to getting into the industry and the business, I had no idea what this was. And I remember coming home trying to explain it to my husband, and he was like, "What are you saying?" And I was like, "Give me another week. I'm still learning." But, you know, it was just like, I was so excited. And it was like this new thing that I had just discovered that no one was talking about. And especially in our communities, no one was talking about this substantial tax savings that you get.
That is key right there, especially in our communities, because yeah, I can imagine how many families owned, 10 plus doors and knew nothing of this.
Mm-hmm. Well, and not only that, but it's always interesting because a lot of people think, oh, investors are these very rich, well-to-do people. And that's not always the case. I mean, by and large, that's not the case. And if you really think about it, anyone can very quickly become an investor. Let's say, for example, that you have a client who just inherited property from their parents passing, and it was a parent's primary home, and it's in a very, solid location where they know that they can get some good rental income coming in. Well, now instead of selling their parents' home, they're going to turn it into a rental property and put a tenant in there. Well, all of a sudden, they just became an investor. And if they continue owning that property as investment, and as it continues to appreciate in value, and they're going to take depreciation, they're creating gain. And when they go to sell that property, they're going to recognize gain on the difference between what they're selling versus their actual basis. So anyone can very quickly become an investor and benefit from a 1031 exchange, especially if they know that they want to reinvest into another investment property.
I think this starting to make sense to me now. I recently was on the buy side of a home that was a 1031 exchange, and there was an addendum that it'd have to be written into the contract, and there was a lot of pressure on me. I mean, to the point where it was just constantly nagging, but now it all makes sense. They really wanted this done. I knew they had to have it done within the 45 days. And in my contract, I said, hey, I can close in 30. And that was how I won the contract, because I could close in 30. And we started to inch closer and closer to that 45, and the pressure started to really get on. But now it makes sense. So that leads me to this next point. I like to understand the numbers. And like, what is somebody truly saving? And so can you give us just a real life example of 1031 exchange, how an investor benefited from that, and like, what are the numbers behind that? Like, what are you truly saving on a tax basis, I guess, if that makes sense?
So it does. And it's really going to depend on where the asset is located, because depending on where the asset's located, you're going to have both state and federal taxes that you're going to be paying. And if the asset, for example, is located in California, on the low end, they could be paying 25% in taxes, but on the high end, they could be paying upwards of 42% in capital gains tax. So think about how much more property you would be able to buy if you had an extra 25 to 42% of your down payment. You're going to be able to qualify for a larger loan, which allows you to buy a more expensive property, which hopefully, if you're making the right investment, it's going to create even more cash flow and revenue for you. So again, just to quantify it, if you were to take $100,000 of gain, $25,000 to $42,000 is going straight to the government in taxes. I don't know about you, but I can think of a lot better things to do with an extra $25,000 to $42,000. And believe me, I can guarantee you, none of it involves giving it to the government.
No, that's helpful. It's helpful just to kind of put the numbers into perspective and just get a sense of like, how you gonna go about it. Because I think when you get your 1031 exchange property, like let's say you identify the property, does it have to be of greater value, or does it have to be of like lower, value? How does that work?
So you can certainly reinvest and diversify your portfolio any way that you see fit. So in order to fully defer the capital gains tax, you need to buy a property at equal or greater net value to what you're selling. So the net value is going to be based on the selling price less your normal cost of sale expenses. So cost of sale expenses will include things like your commissions to the agent, the notary fees, recording fees, transfer tax, title insurance, etc. So those costs all come off the top, and then the balance is what's left to be reinvested. So let's say, for example, using very simple numbers, if you take a property where it sells at $500,000, and assuming they're going to have 6% in cost to sell, that's $30,000. So now they're looking at a net value of $470,000. So in order for them to fully defer the tax, they need to buy at $470,000 or more. If they buy at, let's say, $450,000, it doesn't negate the exchange. They're just going to pay tax on the $20,000 difference between what they needed to spend versus what they actually spent. And then, of course, they can buy up in value as much as they can reasonably afford.
Okay, question. What if the property that you sell is just like maybe like a single family home and you want to turn it into a multifamily? You want to go from owning single family to multifamily. How would that work? Like, would it have to be like rolled into one transaction, or does it not count because it's technically different properties?
So there's a requirement in an exchange. It's called a like-kind requirement. And I will tell you, this is probably one of the most commonly misunderstood terms in our industry, because a lot of times we think like-kind means if I'm selling single family, I have to buy single family. Whereas in a 1031 exchange, like-kind just means if you're selling real property, you just have to buy real property, and it doesn't have to be identical in property type or character. So you can sell a single family home and reinvest into, one commercial building. You can reinvest into an apartment complex, industrial complex, whatever it is. As long as it's real property that you're buying for investment, it'll absolutely qualify for a 1031 exchange.
That's great. And I'm just thinking about, like, as we start to do more and more virtual investing, like I know there's not necessarily a lot of multifamily like duplexes and things like that here in Texas, but it's more common like on the East Coast. So that's pretty cool to know, like there's not a restriction there. And that, as long as it's considered real property, then you're good to go. You've kind of explained, well, actually you explained very well, the benefits of the 1031 exchange. Are there any risks that we should be aware of as investors, and what can we do to avoid those risks in a 1031 exchange?
I think the biggest risk, and more so the biggest challenge that most investors face, is the timeline to identify. Because this timeline, it's only 45 days to identify the property you want to buy. And I will tell you, when you're in the middle of an exchange, it's going to feel more like 45 seconds rather than 45 days. And it's a hard and fast rule that's set forth by the IRS, and they don't allow for any extensions of that timeline or substitutions of properties once you go beyond the 45-day period. So it's really critical for investors to really be proactive in their search for a replacement property. And what I always really advise my clients is that, if at all possible, you want to try to get in contract within the 45-day period. And better still, you want to try to have inspections completed with contingencies removed. That way, you know whether or not you're going to move forward and buy what you identify. And so I would say, again, just being proactive in locating that property. Don't wait until your property closes to start looking for a replacement property. You want to start looking once you know you're going to sell, because especially in the market that we're in, there's very little inventory. There's little inventory, and there's a surge of buyers.
That's what I was about to say. You know, that you probably are going to say, why not start looking for it now? Because essentially you need to already know what house you want before you even sell the previous one in order to make it in that 45 days.
Exactly. Like I was going to say that too. Like I would, if it were me, I would find the property that I want
and then start the process.
And then I would sell mine. Like it would be second, you know, so that I could get it done within. Yeah. That would make the most sense to me.
Can you explain the different types of 1031 exchanges?
Yeah, absolutely. So the most common type of 1031 exchange is called the delayed exchange. Some people refer to it as a forward exchange. This is just simply where the taxpayer intends to sell their investment property first, and then they're going to close on the replacement property second. Like I said, this is definitely the most common type of exchange transaction that occurs. The second type of exchange transaction is called a simultaneous exchange, which is not nearly as common because a simultaneous exchange occurs when both the sale and the purchase transactions are closing concurrently with one another. So the likelihood of, you know, them being in contract and selling their property and also being in contract to buy the replacement property and the closings happening within a day or two apart is very rare. I mean, it can certainly happen, but it's just not as commonplace. And I often get asked the question of, you know, if I'm closing on my sale and my purchase at the same time, do I still have to use a service of a qualified intermediary in my transaction? And I always tell people, yes, honey, you need me. You just haven't figured out why. But
I love that. That needs to go on a t-shirt. You just haven't figured out why.
You need me. That's our quote. You need me. You just haven't figured out why.
Yeah, I love it.
But really, I mean, they do. And the main reason for this is that without us being involved in the transaction, they're still deemed as having constructive control over the funds because they're directing escrow where to disperse. And it then still creates a taxable event for the taxpayer. So again, that's a simultaneous exchange. The reverse exchange, which we're actually seeing a substantial uptick in the number of reverse exchanges due to the shortage of inventory levels, is when the taxpayer wants to buy the replacement property first before they complete the sale of the property that they're intending to sell. So they buy first, sell second. And this really works great if you have clients who are a little bit more liquid and they have the ability to come up with sufficient cash to buy the replacement property without needing financing. There's a financing component, that can be involved, but it becomes a little bit more tricky and challenging. But again, if they're a cash buyer, then they would be a great candidate for a reverse exchange. And then the fourth type, the last type, is called the improvement exchange. And this is essentially where the taxpayer wants to, let's say they're selling a property at $1 million and they find a replacement property that they want to buy for $700,000. But they're saying, you know, this property is going to need some work. So I'm going to put $300,000 worth of capital improvements into the property to fix it up, to get it to that $1 million value. That's essentially what an improvement exchange is. However, it requires that we create an LLC to actually buy the property for the taxpayer. So we'll be in chain of title on the property during the construction period, and they would have 180 days to complete those identified improvements, and then for us to transfer the property over to them at the new higher value. So again, not as common type of transaction.
It's very technical.
Yes.
You know what I mean? I think once it gets into the meats and the different types of things, what do you do? Like you mentioned, you just don't know that you need me, but tell us, you know, what do you do to add value to the property? You know, like tell us, what do you do in regards to your role in the push to make this happen? Like, are you the person pushing me to like make this sale go through, and what's going on with you? Are you funding on time? Get your stuff to get your client together, lady. Is that your role? Like, tell us kind of like what you do to push.
So great question. So really our role and our main objective in the transaction is to prevent the taxpayer from having constructive receipt or constructive control in the transaction or of the proceeds from their sale. So with that, we're going to prepare all of the legal documentation that's required to facilitate the exchange. We're going to sign ourselves into the purchase and sale agreement as a principal party on the taxpayer's behalf. And then, of course, we're going to receipt in the funds from their sale. We work hand in hand with the title company. So when they're ready to sign off and close on the transaction, we're going in and we're countersigning the closing documents, and we're signing off on that closing statement, authorizing the closing, and we're actually funding the transaction. So similar to that, when there is a loan involved and the lender has to fund the transaction and escrow's going, hey, we've got a tight deadline. Well, we're kind of in that same vein, if you will, when it comes to funding. We're going to fund in the cash that's held in the exchange account, and then the lender will fund the loan to complete the acquisition.
All right, so then you know all the investors then in the Bay Area, don't you?
I might you.
You know them all, don't you? We will talk. You know all the investors, you know where they are. All right, I'm excited. I'm excited. All right.
Okay.
So this should be something your CPA should know about, right?
Yes, but here's what I will tell you. Not all CPAs are proficient in 1031 exchanges. So it's really important that if you have clients or if you yourself are considering a 1031 exchange, you want to make sure that you're working with the tax advisor that understands 1031 exchanges. You know, because as qualified intermediary, we can't provide tax or legal advice. I can point you in the right direction and give you all the reference and the information that you need to make that informed decision. But it's really on the taxpayer and their CPA to make that determination as to whether or not, one, the property that they're selling actually qualifies for an exchange, and two, based on the scope of the transaction, if they're audited, would their CPA be able to defend their client's position as to whether or not it qualified? Because under scrutiny of an audit, we're not going to be involved in the transaction at all. It's going to be up to them and their CPA.
So how do you even find an intermediary like
well,
you?
You found the one and only one that you will ever need.
So you could do all over the US, not just the West Coast? Okay, that's good.
So although I base in Northern California, I actually manage the Pacific Northwest region for Old Republic Exchange. But even though I'm, again, based in California, hey, I can facilitate exchange transactions anywhere throughout the US, no matter where the client or the property is located. So, and our process will always be the same. We're coordinating directly with the closing agent. And certain states are attorney closing states, so we're very familiar with the guidelines and what they need and coordinating with them as well.
I just want to say how impressive it is that you direct the Pacific Northwest at only 21 years of age. Like I am. Kudos.
Let me move my gray back.
Kudos.
No, this is awesome to hear and know.
Yeah, it's, you know, like I said, it's not enough that's happening around 1031 exchanges, and it's really a missed opportunity for so many investors.
So my favorite question, are you an investor yourself? And what is your investment strategy, and does it include 1031 exchanges?
So my husband takes care of all of our investments. And so right now the only real estate investment that we have at this time is just our primary residence. Most of our investments are stocks, mutual funds, bonds, etc. Mm-hmm. Working our way into real estate. Hopefully that's our next objective for 2021. So check in with me this time.
I got you.
About that portfolio.
I got you. We're going to do this together. Don't you worry.
First we were like this, now we're like this.
Yes, we are. You just didn't know it.
Is the 1031 exchange on the chopping block in the 2020 elections? And what would be the impact if they're done away with? First of all, how have we gotten away with this for so long? I'm surprised that the US government hasn't already chopped this off. Like, oh, so y'all just gonna not pay us kind of thing. How have we even gotten away with it this long? Because I'm pretty shocked by that.
It's a great question. And honestly, it stimulates the economy. Because you think about it, if you have an investor, they're going to be buying and selling property far more frequently than the average Joe who's looking for a place to live. And with investors, they're not emotionally tied to property. They're looking at it from a tax benefit. Is this a financially beneficial, investment for me to have? Does it make sense financially for me to maintain ownership of this property? And if it doesn't, I'm going to sell and I'm going to reinvest into something else. And so with an exchange, you think, okay, what that's going to do, the more frequency of the transactions that are occurring, that's going to stimulate more income for real estate agents. It's going to stimulate income for lenders, appraisers, everyone within the real estate industry. So it creates so much more opportunity in job development and growth by having this tax benefit. So I feel like we're always up on the chopping block. There was a strong push with the current administration to eliminate 1031 exchanges altogether. And, people would say, oh, Trump's not going to do it because he's a real estate guy. Well, it was his administration that was actually pushing for the elimination of 1031 exchanges. And we fought very hard to preserve exchanges or like-kind exchanges. And we were very successful in preserving real property exchanges, but we did lose the battle to personal property exchanges, which would include things such as the sale of a business, farming equipment, tractors, trailers, race cars, boats, airplanes, art, you name it, it was all exchangeable in prior tax years. But as of January 2018, 1031 exchanges only applied to the sale and acquisition of real property. So I always refer to it, every time we're up on the chopping block, I just refer to it as the Shanaé Marbrie Employment Act because mama kind of needs a job. So, we're always fighting for the preservation of exchanges. And I think even now more than ever, it's so important to preserve exchanges because you think about it, when someone is selling property, especially in the Bay Area right now, where there's just so many vacancies in retail and office spaces, and there's challenges with respect to tenant rights and landlord rights, a lot of people are wanting to sell that asset and relocate. They might want to diversify geographically. Well, what that's going to do is stimulate more income into whatever region that they're buying. And likely they're buying up in value, which means that property taxes are also going to be higher, which again creates more income for the economy and also for that county. So it's kind of a snowball effect. By exchanging, you're creating more income coming in that's being pumped into the economy. So to eliminate that, people are going to shy away from selling. They're going to say, I just don't think that it's beneficial to me to continue selling at the frequency that I was if I'm going to be losing 25 to 42% of my down payment each time that I sell. Why sell? I'll just keep my property. So, we're on the chopping block. Please write to your local governments because Shanaé Marbrie needs a job.
Awesome. That's funny. That's so interesting though, that you are not, is lobbying the right word?
Yes.
Okay. I was going to say, I don't want to call you a lobbyist if you're not a lobbyist, but I know that in this industry, we do lobby for our rights, just in regards to getting us back up and running and selling homes, or lobbying to get back in regards to open houses again. I'm not really sure how I feel about that, but I know that there are certain issues that the National Association of Realtors that they do lobby for our benefit. So that's awesome. That's awesome that you're doing that and that you're so involved in that, and really interesting and surprising that Trump would be against it. It makes you wonder, even though we want to stray from politics, but it always makes you wonder, that guy. All right.
As they say, things that make you go,
Exactly. Like what's he up to? But, I think with these tough times, right, this has been, and it's like Groundhog Day. It's like the same day just keeps happening over and over again. And here we are now approaching the holidays, and it's tough. We've got families, we're homeschooling, and we're movers and shakers, we're entrepreneurs as well. How do you stay motivated just personally during these times? Are you like a book reader? Are you a yogi? What are some of the things that you do to just kind of motivate you during these tough times?
Well, like I said earlier, I just started my new fitness regimen.
Oh, I like it.
Very excited to get some movement happening, which my phone keeps reminding me that, wow, you've reached a new record today. You're not just sitting around at your computer. You actually move. We're detecting a workout. So like
that's awesome.
Fitness shaming me here. But I really, my motivation and my inspiration, I have 2 young kids, and my husband and I, our goal is to educate them, provide that financial literacy, not just give them everything, even though I have a 2 and a 6, how old are my kids? 4 and 6.
It happens to me. Yeah.
And you throw the dog in and I'm shot. I don't But, I have a 4 and a 6-year-old. And so rather than just giving them everything, I make them earn it. Sometimes they have to lose a tooth in order to get $5, but they,
when that tooth comes out, you'll get your money.
Yes,
exactly.
You haven't worked hard enough. So maybe if you lose a tooth, you'll get your money and then you can buy your toy. And so it's creating just this idea of understanding the value of the dollar and how to work for it, and leading by example, and again having that financial literacy, so that way they're not having these conversations saying, no one in my community is discussing this. Why not? They're already going to be very well versed in understanding the benefits of investing, and not investing in real estate, but also in other aspects, and also investing in themselves. So it's really, that's kind of my motivation, is how do I lead by example for the generations to follow me?
I love that. I, talk to other parents, and there's so many things that they're fearful of their children not understanding the value of the dollar. And, we started like having our kids wash cars. We kind of tell the neighbors, hey, they're not really that good at it, but we really want them to understand that in order to get this, you need to like do something. And so they started like a little car washing deal. Just any little thing to get them out of the house, get them doing something and understand the value. So I just love that you said that. I think that was just beautiful. So where can our listeners find you? Where can we find you when we have our 1031 exchange and we're ready to rock?
So you can always reach me by phone, by email, by LinkedIn. So I've got, my phone number is very clever, not difficult to remember. It's 888-677-1031.
Oh, wow.
Ta-da.
Look how you did that.
Oh, that's cute.
I'm also available on LinkedIn. You can find me, Shanaé Marbrie, on LinkedIn, or you can always email me directly. It's my first initial and my last name. So SMABRIE @oldrepublicexchange.com.
That's awesome.
And are you on?
Just an amazing.
Are you on Instagram?
No.
I don't have Instagram yet.
Good for you. No.
Yet. Well, that's what I teach my kids. It's always a yet at the end. Growth mindset. I love it. Episode 2, growth mindset. I like it. Yeah. So we really appreciate you coming on. This was really informative. I think this is just a box that hasn't been opened and that just not really many people know much about. And so I think this would at a minimum get spur those juices in the mind and kind of just see, hey, well, is this something that I could possibly do, and what could I do it with? And if not, give you a call and reach out to you and just kind of answer those pertinent questions. So before we let you go, we like to do this little thing called rapid fire, where we just, just a little fun. And we just ask you 3 questions, and you have to answer them with the first thing that comes to your mind.
Oh dear.
So the first, you ready? Okay. So what is the last musician that you listened to? Last artist?
Anita Baker.
That's my favorite artist of all time.
I love her.
Anita Baker. That's what it is. I would rock out. Now you have to tell me the song, just because it's personal now. What song are you listening to?
Oh my gosh, what was it? Oh,
I got you.
Sweet Love.
Sweet
Oh,
love.
was it?
Sweet love.
Sweet Love. I love it. Yes. All right. Question number 2. This movie comes on and you've seen it a million times, but you never pass it up. It's just a classic and you're going to watch it. What is it?
Coming to America.
That's classic.
The classic.
I like it. That's classic. We know
You're
every
21
line.
and you know about Coming to America?
You know, my parents wanted to make sure I was very well versed in classics.
I like it. And then as soon as this is over, tell me what is the first thing you're doing? Like as soon as COVID's over, no more COVID-19. It's magically disappeared. Poof. What's going to happen?
COVID is over. I am going on vacation and I am indoor dining.
Indoor dining. Where is your vacation spot? Where is your bucket list? Where are you going?
Well, so funny thing, it's my husband's big birthday this year, and we had a trip that was planned where we were going to be going to Europe for 3 weeks.
Oh, I love it.
So we wanted to do Greece and Italy again, and we want to do France as well. So that was put on hold.
Oh.
So this COVID is over. We are jet setting on a plane. Someone give me a drink.
There you go.
Take my kids.
Please take the kids. We went
That's
to Greece.
awesome.
We took our now 4-year-old at 1 to Greece. And yeah, next time we'll leave them at home.
I love it. I love it. Well, thank you so much for joining. This has been absolutely phenomenal. Everything I thought it would be. Thank you so much for joining and thank you for your time. Really appreciate it.
Thank you.
Thank you, Shanaé.
Bye.
Bye.
Bye.